What happens when 3 days of market optimism run head-on into a wall of bad news? Well, you get a day like February 19th, 2026. Let's break down the perfect storm that just slammed the Indian market.
Coming into the day, the market was on a real roll. We were seeing a solid 3-day winning streak, investors were feeling pretty confident, and honestly, things were really looking up.
And then, bam, in just one single session, all of that positive momentum, well, it just came to a crashing halt.
And here are the cold, hard numbers behind that crash. The Nifty 50, it plummeted 365 points. We're talking a drop of over 1.4%. But the really critical detail here, the one you need to pay attention to, is that closing number, 25,454. Why does that matter so much? Because that's a decisive break below the huge psychological support level of 25,500. And hey, if you want to know what that drop actually felt like on the trading floor, you just have to look at the India VIX. Traders call it the fear gauge for a reason. And today, it just exploded. It spiked over 6.6%, and that signals a massive, rapid shift from, investor complacency to straight-up fear.
Yeah, so this wasn't just a random bad day. Not at all. This was genuinely a perfect storm. We had a whole combination of negative factors all hitting at the exact same time, and that triggered this massive wave of selling.
The bears were in the driver's seat from the opening bell. The market opened lower, what we call a gap down, and the selling it didn't stop. It was relentless all day long. And those key support levels that have been holding strong, they were just shattered.
Okay, so that naturally brings us to the big why, right? What on earth caused this sudden and frankly violent downturn? Let's dig into the global headwinds that were fueling this fire.
All right, it really boils down to these three things hitting all at once. First, we had rising geopolitical tensions. Second, a surprisingly aggressive or hawkish tone from the U.S. Federal Reserve. And third, a worrying spike in our own domestic inflation. Let's break down how each one of those played out.
Okay, so here's the play-by-play. The friction between the U.S. and Iran, that pushed Brent crude oil over $71 a barrel, which immediately sparked inflation fears. Then, the minutes from the U.S. Fed's meeting came out and, surprise, a hawkish twist that basically just crushed any hopes for early interest rate cuts. And, to top it all off, as if that wasn't enough, India's own wholesale price inflation hit a 9-month high. It was a total triple threat for market sentiment.
So let's talk about the fallout from all this. Because, a drop this sharp, it doesn't just hurt portfolios. It fundamentally changes the market's technical structure. This is the stuff that can have lasting effects.
So, all the technical traders out there are looking at this one specific pattern right here. It's called a bearish engulfing candle. And just look at it. You can see how today's big red candle completely wiped out or engulfed the price action of the previous 3 positive days. It's a classic and really powerful signal that this upward trend might be over. This slide right here, this gets to the absolute heart of the matter. The entire market mindset has flipped. Literally yesterday, the dominant strategy was buy on dips. Everyone was looking at any little drop as a buying opportunity. Now, that has completely shifted to sell on the rise. That means traders are probably going to use any small bounce as a chance to get out because they expect prices to fall even further.
Right, that 25,500 level on the Nifty, it was so much more than just a number. You got to think of it like a dam. It was the line in the sand, this massive support level holding back a flood of sellers. Well, today, that dam broke, and what was once a strong floor of support has now become a brand new ceiling of resistance.
Of course, a big market move like this is felt across individual stocks. So let's take a quick look at the specific names that really felt the pressure today. And when you look at the top losers, you can see just how diverse this selling was. We're seeing major hits in aviation with Indigo, retail with Trent, autos with M&M, cement with Ultratech. This wasn't a problem stuck in one sector. Nope, the selling was broad-based and really widespread. And then on the flip side, just look at how short this list of gainers is. Almost nothing managed to stay in the green. The big exception, of course, is ONGC. It jumped almost 4%, and that's likely because it got a boost from those higher global oil prices we were just talking about. A rare bright spot in a sea of red. And the damage actually went deeper than just the day's top losers. We're seeing several really well-known companies like Asian Paints and Bandhan Bank now testing their 52-week lows. And that shows you there's an underlying weakness that's been building up in certain pockets of the market for a little while now.
All right, so after a day like this, the obvious question on everyone's mind is, what happens next? Where do we go from here? Let's take a look at what the data suggests for the very next trading session.
So, what are the odds for tomorrow? Well, based on today's technical breakdown and that huge spike in volatility, a probability model for the Nifty 50 is now suggesting a whopping 65% chance of another bearish day. Now compare that to just a 10% chance of a bullish recovery. The odds have clearly and dramatically shifted in favor of the sellers.
And this chart here just really visualizes that bearish outlook for you. With a nearly 2 in 3 chance of continued downward action, the market is sending a really clear signal that the path of least resistance, at least for now, is lower.
This quote from the underlying analysis, this really sums up the immediate takeaway perfectly. The path of least resistance is lower toward 25,200. Caution is advised as volatility expands. So that 25,200 number, that is now the next key level that absolutely everyone is going to be watching.
And that brings us to our final thought for today. With that crucial 25,500 level now broken and the sellers so firmly in control, it really begs the question, is that massive psychological mark of 25,000 the market's next major battleground?